So what are the components of the business plan? Well, we do them in a particular order. So I'll put in the components of the business plan in the order in which we're going to do the business plan. And the first thing we're going to do is something called a cash budget. So we're going to learn how to do a cash budget. And when we're doing our cash budget for, let's say, for the next 3 months, in our case study, I'm just going to do a business plan for 3 months, because it takes a long time to do a business plan. If we did one for a year, we'd be here all day. So I'm going to do a short business plan just for the next 3 months. Normally it wouldn't be that short, but we can learn everything we need to know about a business plan in a short business plan. So that's what we'll do. So the cash budget is going to tell us is going to tell us about the future liquidity, okay, of the business, based on certain assumptions. Okay, we're going to have to make some assumptions about the future, and so we're going to see if those assumptions are valid. Okay, what kind of a state will be in from a liquidity point of view? Will we be short of cash? Will we have enough cash to run our business, and so on? Okay, so that's the first part of the business plan. And all our business plans will have these 3 components. The second part of the business plan is going to deal with the profitability. And what we're going to call this part of the business plan is a projected. Now, we only call it projected because it's projected into the future. Okay, so a projected profit and loss account. So this profit and loss account, this projected profit and loss account, is very similar to the ones that we would do in accounting, okay, for the past. Okay, looks very much the same, and the only difference is, of course, they're future estimated figures rather than actual past figures. Okay, and of course the projected profit and loss account will tell us about the profitability or lack of. Okay, and the third part of our business plan that we're going to do is another projected. And this time it's going to be a projected balance sheet. So we're going to learn a lot about accounting in this, you know what I mean, as well, because these are accounting ideas, okay? But again, it's a projected balance sheet is very similar to an accounting type balance sheet about the past, except this time it's projected into the future. And this document, this part of our business plan, will tell us about the solvency of the business. Okay, so there's our three components of the business plan. So we're going to do a case study now. Might as well jump into it, and we're going to do a business plan, and we're going to do a simple one, I suppose, simple enough anyway. And we're going to assume maybe we're doing a case study, and the case study might involve us setting up a business. Let's say it's a new business, and maybe a few of us are going to get together and try and run a business together. Now, the actual type of business doesn't matter. We're just going to do a business, focus on the business plan and see how it works. So let's assume maybe that we have a product. Okay, let's say we're doing this business plan with maybe some engineering students from Kevin Street or whatever, and let's say they've developed a prototype. Okay, and let's say we're going to join them and see, can we run a business making and producing this item that they have invented, we'll say. Okay, so let's say it's something maybe that you might put in the back of a computer or something like that, and it has, does something wonderful altogether. So let's say they have a product. Okay, so maybe I'll just write down case study first of all. So it's not case study. So let's put that out. Okay, so this is our case study. This is part of the fourth item. Shapers. Okay, case study. Now I'm just going to make up figures in this case study. So in the case study, we have a product that we're going to produce. Okay. And let's say from an engineering point of view, this is a feasible product, and we're very happy. It does what it's supposed to do, and we believe people will be very interested in buying this product. Okay. Now, what we're interested in doing the business plan is it financially feasible? Okay. Is this will this product be financially feasible? So what we have to do is, okay, if we want to figure out is it feasible, we have to do some research, some financial kind of research. That all the engineering research has been done, and it's fine. But we want to do now some business research. Okay, so we've got to gather information about this project, I suppose. Okay, so to us this is a project. It's a new business. We don't know anything about it really yet, so we've got to find out how it can be done from a business perspective. So what information would we need to collect? Okay, so you might think about this yourself, a brand new business. What kind of information would we need? Well, I suppose we want to find out, is there a market for this? Okay, so what you probably want to be doing is some market research. Now, I don't really know very much about market research, okay, but I presume it's about contacting potential customers one way or another. So let's say this product that we have is a computer-based product. Let's say our potential customers, at least initial customers, would be, say, these multiple chains of that sell computer accessories and things like that. So the market research would we make contact with these people, these companies, maybe make a pitch and show them what the product is like. Or contact them in some way, communicate with them in some way, so that you can show off the product and see would they be interested in it. And on that basis, we get some idea of the market for this product. Okay, and maybe we might get some tentative or real, orders in, that type of thing. So let's say, we talk to these people, and let's say the market size. Then we're going to get some measure of the market size, and we're only talking about 3 months. So let's just make up the figures. So let's say in the first month, when is the first month? Of course, let's have a look. Let's say we're going to start in October. Okay, let's say we're going to start in October, and let's say we anticipate, on the basis of our conversations with our potential customers, that we're going to be able to sell 1,000 units of this thing. Okay, they're very impressed with it. And they'll say, yeah, we'll take some of those. November, then, let's assume we're going to be able to sell 2,000. As I said, I'm just making these figures up. It would be done much more scientifically if you were doing this for real. And in December, we've got to try and find out, well, how many might we sell? And then we'd have to make them, obviously. We're going to sell 3,000 units in December. So at least now we know for the 3-month period of our business plan, we know how many units we've got to make, I suppose, because that's what we're going to sell. Another thing that market research might tell us is how much will our customers be prepared to pay for the product. Okay, so we might have a price in mind that we would want to sell the product for, but that might be unrealistic. But following our conversations with our potential customers, we'll be able to figure out what price we can get away with, I suppose, and we'll cover our costs and things like that. But let's say we don't know if it'll cover our costs, but let's say the best price we hope to get for this thing would be €20, whatever it does. I don't know what it does. Okay, so that's our market share. So that's useful information, from the market research. Well, what else do we need to? What other kind of information would we need to collect in respect of our new project? Well, I suppose we'd want to find out, well, what will the estimated costs be? What will our estimated costs? We're going to make this thing, so we're going to have costs of production, I suppose. So what will these production costs be? Well, I suppose because we have a prototype of this thing, we've made one already, or someone has made one, we know how much it costs to make. So the estimated cost might be materials. Okay, I don't know what would go into it. Materials, I don't know, metal, copper parts, or God knows, some accessories of various descriptions. So, but let's say the material costs is at €4 per unit. So every unit we make, we call them units, every one we make of these things, it's going to cost, we're going to have to put in €4 of materials into it. Okay, now let's say we're going to work in the business. The people who are going to set it up, maybe we're going to form a limited company and we'll take a shareholding in it or something like that, but we're also going to work in it. So we're going to provide our labour cost, and I suppose we don't want to take too much out of the business. We want just enough to live on. Okay, so let's say that the labour costs are 8,000 a month, we'll say. Okay, 8,000 a month. Whoop. Per month. Okay, so that's the labour cost. So we've material costs of €4 per unit, and the labour cost for us all collectively 8,000. Maybe, you know, whatever that is per person, 1,500 a month or something like that. Okay, and the other costs then, the other costs of production, I suppose, are sometimes referred to as overheads. Okay, and these would be things like rent and insurance and telephone bills and light and heat and all those other things. Now, while the materials are easy enough to work out, you know, we have a prototype, so we know exactly how much it costs in materials to make the product, and we know how much we're taking out of the business ourselves because we've decided how much we want to take. The overheads are more difficult, okay? So we would have to do some fairly detailed research, talking to various people maybe in business or talking to estate agents about the rent, and so it's more difficult to actually calculate in advance what your overheads are going to be. So while it's difficult, it's not impossible. So let's say we have done that, and we've decided that in October our overheads, all the various other costs that we're going to have in our business, that in October they will amount to 9,000. Okay, in November they will amount to 11,000, and in December they will amount to another 11,000. So these are all our best estimates of what the costs will be in the future. Okay, if everything goes according to plan. Okay, the next thing I suppose we'll have to talk about is well, how much money do we have? We're going to need some cash. So to set up a business, it takes money to set up a business, and there's a number of ways to get money, to start up a business. One is to go to a bank, okay? And I suppose if we go along to a bank, the first question that the bank manager will ask us about our project is, well, how much do we need? And we don't really know how much we need, okay? That's the big problem with this. But hopefully when our business plan is done, we'll know how much we're short of, and we'll be able to tell the bank manager or whoever it is how much we need to borrow. But I suppose we're going to have to put some money in ourselves. So, so we're going to invest a certain amount of money. So let's say there's 5 of us. So let's say we all put in 4,000 each. So capital available. The capital that we're going, remember the money that the owner puts in, or we refer to that as capital or equity. We're going to put some of this equity into the business. And let's say collectively we're going to put in 20,000. Okay, 20,000. We're going to borrow it maybe from a relative or something like that. Don't know, or savings or something like that. The next thing then, the next bit of information that we've got to collect is, well, if we're going to make something, we're going to make these items, I suppose we're going to need machines or equipment or something like that. And let's say we found some second-hand equipment or something, and there's another company maybe either closing down or retooling or whatever, and they have this equipment available. And let's say the equipment, we could get it for 15,000. Okay. Any other bit of information? Well, I suppose another bit of information is, and I suppose this will come as a result of our market research. These potential customers that we have, they're in business a long time, so they'll probably be wanting credit. Okay, so when we sell to them, they don't want to pay immediately, so they'll expect a certain amount of credit. So let's say we have to give them 1 month's credit. So I'll just put that in there, 1 month. And this is very important. It doesn't sound important when you're starting off. 1 month credit to customers. And we'll see that this is extremely important. And it may decide whether we go ahead with this project or not. And the final bit of information is, because we're a new business ourselves, okay, that no one knows us, or no one trusts us maybe, or whatever, but we no credit. We cannot get credit from our suppliers. No credit from suppliers. So let's say they're the assumptions, okay, that we're going to go forward with these assumptions, and we believe this is the most realistic thing that's going to happen. Okay, this is what we believe will happen. So with that information, we don't really know very much. Okay, we're still very unclear as to how much money do we need to borrow? Will we be profitable? Will we be solvent at the end of a period of time in the future? Is this a good idea to go into business? So to help us answer those kind of questions, we're going to produce a business plan using this information, using the information we have here. So we said that there's 3 components to the business plan. Okay, there's 3 components. And what did we say they were? We said there was a cash budget, which is going to tell us, will we have enough money? Okay, will we have enough cash? Do we need to borrow? How much do we need to borrow? So we'll do that first. We're going to do our first cash budget. And then we'll go and we'll do will we, based on our assumptions about the future, will we make a profit? And based on our assumptions about the future, at the end of the 3 months, remember we're only going to do it for 3 months, will we be solvent, okay? Or will we be insolvent? Now, if we're going to be insolvent, that's not a good idea. So we want to be sure that if we go into this, that we don't lose everything, lose the money and waste our time on this project. Okay, so let's do the cash budget first. Okay, now where am I going to do this? Let's move over here a bit.